not much happening on the markets. We're still wrestling with that $100,000 level, but a lot is happening in the privacy sector. And I mean, if you look at the ZCash chart, ZCash today tagged about $670 on some exchanges, which is a crazy run, and maybe highlights just how important privacy is. Now, we don't really do shows where we discuss only one project. It's very rare that we do that. But I think today we're doing a show where we're going to speak about one project, and it's a project that's been flying under the radar. But today, as we stand, that project is currently trading at, I don't know how to measure the FTVs here, but ultimately at a big FTV, 10 million, 5 billion, 15 billion. That's what we're going to find out today. It's going to become one of the biggest blue chip projects out there. And even today, it's the project in crypto that has the most RWA, or real world assets, on chain. The project's called Canton. And today we're going to dig into everything that is Canton. And if you haven't heard about Canton, don't stress, because by the time we're done here today, you'll know everything there is to know. So big show today about a big protocol that has been flying under the radar. Let's get the show on the road, guys. Don't kick yourself if you don't know this project, because up until a while ago, also this project was flying under my radar, and then when I discovered it, I'm like, hold on a second, this project is absolutely amazing. We're going to dig into the world of Canton today. As I said, we don't really usually do shows where we talk about one project, but I think this project is quite unique and quite special. We've got one of the founders who's joining us today, so it's going to be a big show. Guys, I'm reminding you that this is our Friday Banter. Our Friday Banters, as usual, brought to you by our best sponsors, which is NordVPN. If you want to be safe in crypto and you want to mask your IP address so that no one knows where you're actually at, I think what most people don't realize is that when you're surfing the web, your computer leaves a digital footprint of exactly who you are and where you've been visiting. Now, the one way to actually mask this is to use a VPN. And when you do that, you basically protect your identity and you protect your right to privacy, which is what we're going to be talking about today. If you want a VPN, you can get one of these deals. It's less than $3 a month and you get a 30-day money back guarantee. Honestly, I think if you're in crypto and you're not using a VPN, then maybe you shouldn't watch the show, because this show is about privacy. Anyway, without any further ado, I want to talk a little bit about Canton, and actually quite an interesting story about Canton. I lived in New York a couple of years ago, and I was working in what is now probably the Canton offices, or the DAML offices. And I was working with this team, and they were a super smart team, and they were building big things. And I lost contact with the founders and the team, and every now and then we connected on Twitter. And I then met them at the London conference that I went to, DAS in London. And they showed me what they had built, and it was almost like their vision came to life. So today I want you guys to meet Yuval, who is the founder of Canton, or one of the founders of Canton. And he's going to tell us everything we need to know about Canton. Yuval, how's it, man?
Hey, man. How are you?
So you guys, from the time I left, you guys just carried on building, right?
Yeah. I mean, we've been very patient until we were ready to launch the project. So, yeah.
So let's talk. Building. Yeah, let's talk about the project. So how do you define Canton? What is Canton? For people who don't know what Canton is, never heard of the project. It's a project that you could say has been flying kind of under the radar, but it's trading at a massive FDV, and it's like made a lot of traction. In fact, one of the things that I picked up, which I'll try and find here, is that when you look at the real world asset dashboard, Canton has got the highest RWAs on chain at the moment. Is that right?
Yeah, well, that's just the beginning. So because Canton has configurable privacy, websites like RWAs, the use cases and the applications to actually allow some of the metadata from the project to flow out. So what you're seeing right now on the dashboard is just one project that got started, and there are more projects in the works to release the numbers and the scale of the RWAs that exist in them.
So what is Canton? I mean, I take it, yeah, maybe you could break down for us exactly what Canton actually is.
Sure. So listen, I mean, I think that everybody understand that smart contract chains eventually are all going to go after RWAs, because Bitcoin is the one asset, in my opinion, that is unique, right? Store of value, where everybody else is trying, or smart contract chains are trying to figure out how they become the rails of new financial markets. That's what everybody eventually is trying to go after. So when you and I were in New York, when you were in New York, starting to create this big business, and we were thinking about, well, what would it take to bring, these types of numbers from RWAs? We said that, for example, privacy was a must-have, and privacy for us has a very specific definition, but we never thought that publicly traded companies or regulated companies will ever do things on-chain natively without privacy. So that was one aspect that we thought about. The other one is that a lot of times people will say that crypto is immutable. I think we know that that's not true. When hacks happen, more than 50% of validators agree that the hack should maybe disappear. And I think that a lot of times,
fork the chain
and stuff like that. Exactly, or they fork the chain. Exactly. So I think that people in crypto think that that's a good thing, because we associated a hack with a negative thing, so we rolled it back. But also by doing that, you've just proved to a lot of large institutional players that maybe they can't trust your chain to be immutable, because maybe today we say that hack is bad, tomorrow we say that South African stocks are bad, and maybe we should just roll them back, right? You've just proven that crypto is not immutable by doing that.
Mm-hmm.
So there's a lot of other features that you have to build to give comfort for issuers to know that they have sovereignty and control over, their books and records, and they can trust the chain to be effectively the registry for their assets. And doing all of that in a scalable way that can also scale horizontally, meaning that there is no upper bound to the scale of the network, takes time. So we've been very quietly building, looking at others making certain mistakes, and maybe tokenomics would be another place where literally observing what was happening in crypto for many years gave us an opportunity to do things different.
Okay, so in terms of the design of Canton, is it a layer 1 blockchain? How does it work? Maybe just walk us through the design, because from what you're saying, it sounds like you want every bank or every issuer or every group to be able to have their own chain. Maybe does that design sound right?
So maybe to try to be simplistic, what we tried to do is we wanted to have a user experience of an L1, which in my opinion is the most important thing, with an architecture that looks like many L2s under the hood. So the reality is that every L1 will have an upper bound of performance, meaning eventually even the fastest chain in the world, the more you put on it, will hit some capacity limits. And that's why we've seen this kind of architecture change in Ethereum of L2s. But in my opinion, one of the mistakes that happened in L2s is they lost the user experience of an L1, meaning I cannot compose a transaction between two different Ethereum L2s. I now need bridges in the middle and all kinds of things like that. And we know the risks that happen with bridges and what could happen. So what Canton did is it effectively allow users to create a canton, hence the name Canton, like the Swiss canton system. So every canton can have its own privacy, access controls, configuration, but you can compose transaction across all the different cantons as if you are on the same L1. And
so
that's
when you talk about a canton, if I understand correctly, and I'm trying to make it a little bit simplistic for our viewers that aren't really technical, but you're almost talking about a layer 1 blockchain which every bank can effectively kind of spin up to do whatever they need to do. And the layer 1 blockchains are all interoperable and can talk to each other as if they're all the same layer 1 between the banks.
Perfect. That is correct.
Okay. And do they all settle to a main chain, a main canton, a mother hub of is there a main chain here?
So there is. So the main chain is effectively what composes all of these cantons together. So the main chain is effectively what creates that user experience when you work across these different cantons to feel as if you're just on one network.
And so the cantons basically it would kind of be the equivalent of if all the ETH layer 2s were just written on the same on the OP stack, and they all just spoke to each other without having to bridge from Arbitrum to Optimism. They actually communicate seamlessly between one another, and they settle to this main canton which you mentioned.
Exactly. But the really nice thing is that on Canton, all these different cantons don't have to have the same properties. So you can actually create a transaction between a canton that has a privacy model to another one that doesn't, without actually leaking information from the privacy one. So yes, it's exactly everything you described, but what's the important thing is that not all the cantons need to have the same properties, and they can still talk to one another seamlessly.
So you can modify. So I mean, if we go back to Cosmos, which was all the projects that effectively used the Cosmos SDK back in the day, and they gave us this promise that all these chains would eventually just be linked up with that IBC, I think it was called. You're kind of doing the same thing without the IBC, am I right? Like without having the need for that bridge.
Correct.
Okay, and would each person that spins up a canton, would they need their own validators, or do the same validators validate across all cantons?
Yeah, so the validators can connect to any canton. So think about the validator like your browser to the internet, and the validator can connect to an amount of cantons. So no, they don't need to, but I mean, again, so if you have a validator, you can connect to all the different cantons. You don't need a validator for every canton.
So I'm Citibank, and what I do is I'm Citibank, and what I do is I process transactions on my own canton. They settling to the main canton, and now I want to do a transaction which involves, for example, Deutsche Bank or something like that, and I can effectively just almost talk to their canton seamlessly, and the two chains can basically share assets across each other. So you can send a Citi dollar to a Deutsche dollar to Deutsche, and Deutsche can send you their dollar to yours, and now they're just sitting on what would be effectively the same chain.
And the beautiful thing actually in this architecture is two things that I think are extremely important. One is the disruption in your example of the Deutsche canton. Let's say for whatever reason they had some kind of a technical issue, does not affect the Citi canton, right? And that's a nice thing, like right now, because in order to get this really good DeFi experience, I mean, full composability, everything has to sit on the same ledger. But the problem is if that ledger now has an issue, as we've seen in crypto recently, certain ledgers had issues, suddenly the whole ecosystem gets affected. Where in our case, like if the Deutsche canton has an issue, it doesn't impact all the other cantons. There's a clean separation. The other thing that, in my opinion, this architecture allows you to do is really to get the best, like in L1s, where everything has to come into one ledger. You kind of have to convince everyone to come into your ledger, where on Canton, everybody can kind of like join the ecosystem whenever it's convenient for them. They can organically grow. And then like today, kind of again, if you take your example, like let's say Citi never thought about doing payments versus Deutsche. Of course they did, but let's imagine. And suddenly Deutsche shows up in the Canton ecosystem. They're like, oh, now I can actually start doing transactions with you. And we didn't have to convince everyone to come just into one ledger.
And for example, like when USDT and USDC launch USDT on Canton, are they launching it on Canton and then those USDC are completely tradable across any cantons without restrictions?
Yes, from a technical perspective, it doesn't mean that every application needs to say that they are willing to accept USDT. So from a technical perspective, yes, that is a possibility. But let's say someone said, I don't want to accept some sort of stable coin, they can prevent it at the application layer. But from a protocol perspective, what you said is correct.
And to spin up a canton, like, is it an expensive process? Is it a quick process? If I'm a user, am I allowed to permissionlessly spin up my own canton and do whatever I want with it? Or is it open and permissionless and cheap and easy to set up?
So it's a good point. So our view is that we use the word public and permissionless versus private and all of that stuff. my view is, first of all, that all chains have permissioning. We like to think that all the layer ones are permissionless and all the layer twos are permissionless. I would say that a good chunk of the layer twos are running a centralized sequencer by one entity. And that entity just shows that their sequencer currently has permissionless access, but they can just as easily change that permissioning to be different. And my point is they have set the permissioning of something. So our view is that access to Canton should be fully public, meaning everybody should be able to access Canton like everybody can access the internet. But it doesn't mean that every application or every Canton on the network should allow you to use them. So no different than like if you want to go to a chase.com, Chase has all kinds of requirements that say in order for you to access beyond the landing page, I'm sorry, the government tells me I have to KYC AML and until you do that, I cannot give you access beyond the landing page. So that's kind of a similar architecture, is that it's a public network. Everybody can access the network. It doesn't mean then every application on the network is fully permissionless.
And to spin up an application on the network, like if I wanted to do a Banter Canton tomorrow where my guys can do transactions on a Banter Canton, is it that easy, or what's required here?
Well, for you, Ran, it will be a bit harder than you doing the shows, but maybe some of the smart people that work for you, it will be easier for them. But yeah, I mean, listen, I mean, there's many applications that exist, and yeah, I believe that it's. I will say that from a language perspective, we've created our own smart contract language, and maybe that is a bit more challenging than some of the public permissionless chains out there. But that's because, again, the level of sophistication of what you can do is higher, and it requires a bit more of understanding of how to build, decentralized applications with privacy. So that's
okay. So let's talk about DAML, because I'm assuming DAML is the language that you guys wrote. And
yeah.
I remember when I was sitting in the offices, you explained this to me. But what is the logic, and why did you need to create your own language to achieve this objective? Like, what does this? Why do you need DAML in order to run Canton? And DAML, for you guys who don't know, that's the programming language which operates or which spins up these cantons.
Yeah. So you started the show by talking about privacy being a thing recently, but it's like you said, it's a recent thing. Meaning, until I would say half a year ago, for the most part, when you kind of read online about crypto or seeing the projects, most people would have said that privacy is a bug and not a feature, right? In crypto.
The old administration kind of said it was a bug and convinced us that it was a bug because if you touched crypto and it was private, you could end up in jail.
I think it's even prior to the old administration. I mean,
yeah.
I mean, Ethereum launched without privacy, and then everybody else kind of that copied Ethereum did it without privacy. So I would say that the architecture of layer ones have really copied Bitcoin without really thinking about what is it that they're trying to develop. So Bitcoin is a decentralized asset class. Smart contract chains are platforms, and these are platforms that should try to host multiple applications. And effectively, they just said, no, it should all just be the same and pseudo-anonymous, and there is zero privacy. And the problem is that when you develop tools for such an architecture, the smart contract has no notion of privacy. So when you look at smart contract code of other chains, there is no place to kind of even express privacy. So, we started a long time ago, and we had to kind of come up with a language where you can actually express privacy. Who is entitled to see the smart contract? Under what conditions? Are there ways where the smart contracts become public under certain conditions if something were to happen? Can I invite someone to see private information because I have the rights to show the contract to someone else? Like, those are things that are extremely challenging to do, and there were no tools that were available. So we created our own smart contract language, but I will say that in the next, year or so, you're going to see that we're opening the ledger to other languages that you'll be able to build on top of it.
So I was about to ask, like, learning a new programming language is not like something that people want to just do very quickly. Is it hard to learn DAML for a normal developer, someone who's been working as a developer? What's the process to learn DAML? How different is it from anything else that they've used?
I mean, it's not too different than learning a new language. Like I said, there's thousands of developers building using DAML. So I think that it is different. Again, if you just wrote smart contracts on other chains, you now need to think about, well, who are stakeholders to the smart contract, aka should there be any privacy? So I would say that the development pattern, if you were used to developing other smart contract, is different, and that requires kind of like a reorientation of the world now that you need to think about privacy. But just conceptually, from learning just a new language, I don't think that it's significantly harder than any other language.
And where would a developer learn the language? Like, if I was a developer and I wanted to dive in and learn DAML, where do I learn the language?
I think you can go to the website of the network or of the foundation, and there's links to documentation, and there's certifications and a lot of online tools to help you learn the language.
So when you founded this, was the founding premise privacy? Like, did you look at the blockchain and say, great, everything is transparent, everything is immutable and transparent, blah, blah, blah. And you said, hold on, but the world can't work if everything is transparent. Was that your entry point?
No, the entry point was, how do we run institutional volumes on chain? That was the premise. My premise was, crypto will be big, but it will never be big unless institutional players adopt it. It will remain high stakes monopoly.
And institutional players need their own rules, and they need privacy, effectively what you're saying, and they need to be able to talk to everyone else.
Yeah, I would say you said their own rules. I don't know if it's their own rules. I would say that institutional players have to abide by a different set of rules that are more strict. Yes. Right? So that's more of how I think about it. So, and again, and when you think about, trading firms, like, what trading firm would be okay showing all of their positions or all of their trading strategies? What trading firm?
It seems like James Wynn is happy to show all his positions. No, but yeah. You're saying so by running a canton, a Deutsche Bank canton, Deutsche Bank effectively keeps all its IP private when they need to keep it private. Certain stakeholders can see what they need to see, and they can share whatever they want selectively to the main network, right?
They can set what are the characteristics. If Deutsche Bank said, we can do everything in a fully public permissionless manner, and we find value in that, they can do that. We don't take a view on what is right and what is wrong, right? This is, I think, some of the problems in crypto is that crypto kind of lends itself to being very binary in nature. This is my worldview. You either accept it 100% or figure out how you kind of like, push yourself into my worldview. Where Canton kind of says, nah, the world is not homogeneous. It's very heterogeneous. The laws in Europe are very different than the laws in the US, that are very different than laws in Asian countries. And if you want to be able to have everyone fully on chain, you need to have the flexibility to allow them to kind of set the rules so they can actually comply with the law and actually even comply with the use case that they're trying to bring on chain, right? Some use cases want to be public permissionless, right? Like, if you think about the NFT era, the whole thing was about having no privacy. Look at this image that I bought. I mean, that was the whole point. It was showing off with what you have, right? So probably having NFTs with privacy wouldn't have been a good use of the technology, right?
Yeah, definitely.
But right, exactly. But when you were trying to think about, like, how do I do a treasury management for a publicly traded company that doesn't want the whole world ahead of their quarterly earnings to see how much money they move between their subsidiaries, maybe privacy is a good thing. That's the only
so
view.
I'm interested to hear your thoughts. We'll get back onto Canton in a second, but I'm interested to hear your thoughts specifically around ZCash and what's happening right now in ZCash. ZCash was almost declared dead, you could say, except for like a couple of, very, very, very loyal developers. And all of a sudden, in the last month, it's done a 10x or whatever it is. The chart's gone absolutely parabolic, and now everybody's talking about privacy, and they're talking about ZCash as like the private Bitcoin, private money. And as someone who's in privacy and has been working in privacy for so long, I'm very keen to hear your view on ZCash.
Yeah. So first of all, anyone who declares Zuko dead is makes mistakes, and have a lot of admiration for ZCash and what they're doing. I think that it's important to understand that ZCash is more comparable to digital cash in the sense that
Yes.
there's anonymity there. Meaning, if I give you cash in the street and nobody knew and nobody was there, right? I would have no evidence, right? No evidence that I've given you money. And you wouldn't be able to prove that the money came from me, right? Assuming perfect condition, we didn't record anything. Yes. We met at a place on the street where there was no witnesses. I think to me that is ZCash, right? It's the equivalent of having cash on chain.
Yes.
That is a fine use case. I mean, it is, and I think that's why people are very excited about it, because they're finally understanding that. And a lot of times people think that privacy is only an institutional requirement. I would say, yeah, for institutions, sometimes privacy is a requirement, meaning it's a non-negotiable item. But I also say, but even private citizens, if they knew that privacy was an option, I think that they would take it. I think that a lot of times in crypto, people just accepted that lack of privacy is just the way it goes.
So you agree? I mean, we agree on the thesis. Like, I think one of the biggest flaws to crypto is the fact that every transaction, or the biggest flaws to Bitcoin, is that every transaction is public. And I mean, my thesis is that ZCash is Bitcoin just with privacy. And I don't think it should be the same market cap as Bitcoin, but I think at 0.5% of Bitcoin's market cap, it might be a little bit like undervalued. When I say undervalued, I almost say like the private version of Bitcoin should be 5%, 10% of the public version of Bitcoin, let's just say. I mean, what am I missing? Is there a flaw in my logic here?
Yeah, so I think that it's important to understand, again, to me, the difference between privacy and what I would say is anonymity. So when you have ZCash, you are relying on the math of the zero knowledge being correct. Okay? But there is no way for you to know, unless you are a very, very, very intelligent person, to know is the math of
the zero
ZCash
knowledge
correct. So you're relying on effectively just an algorithm telling you everything is good, nothing to see here. The genius thing about Bitcoin is that you don't need to rely on that. You get to see all the account balances. You can audit that the ledger is correct. And I think that's the genius thing about Bitcoin. It's effectively just, you can't cheat. Everybody can audit
because
everyone.
You can see everybody's balance. Everybody can audit the system at any point in time. And that's why it was
the
built.
Problem is, but the reason that that's so critical for Bitcoin is because it doesn't have an issuer. It's completely decentralized. So when you have assets that have no issuer, the authenticity and the truthness of the ledger is everything. Meaning, you can imagine what would have happened if today someone could have minted Bitcoins out of thin air. Bitcoin would go to zero. If that was a possibility, if someone discovered that I can just create Bitcoins out of thin air, that would take the asset to zero. Would we agree?
Yes.
Right? Cool. So the problem in ZCash, or the one risk I think that you carry, is that there could be bugs inside the math that you wouldn't know, but the math will just tell you everything is fine. And there have been multiple examples, including in ZCash, where someone went and audited the math and found out internally that there was a bug. But until then, everybody thought the chain was running just fine because you couldn't audit what is going on inside. Solana confidential transfers had exactly the same bug. You could have minted coins out of thin air. So that's why I think that there is there's a lot of value to ZCash, and I don't think that it's going away. And I think that there's a lot of room for it to grow. But I just wanted to explain the difference between Bitcoin and that. And again, Canton takes a very different approach to privacy. So we don't take this anonymity, nobody gets to see what goes inside. It's a very different approach to privacy.
You say everyone can see, everyone that you want to see can see, and those that you don't want to see can't see, and that's pretty much what Canton does, right? You can decide what you want the people inside your bank to see.
Yeah, I think that for us, it's very similar to contract law. Think about it. You, as the writer of the smart contract, are writing who are the parties to your contract.
Yes.
And the parties to your contract are the ones that get to see the information.
So let's talk about funding. Let's talk about funding, because you guys have raised multiple rounds. I think most recently you raised a round that was over $100 million. Good morning. So most recently you raised a round that was like over $100 million. And I must say, I've seen some of the names that are involved and maybe invested in Canton. It's quite an impressive list. Maybe just walk me through, to date, how much money have you guys raised? Who are some of the biggest investors in Canton? Give us some insight as to how this thing's funded.
Yeah, so again, mainly because we wanted to get large-scale institutional players to join the network, we took a very conservative approach to how we launched the chain. So we've raised money, didn't do a lot of crypto VC money. We did more raising money from those that we thought would eventually participate on the network. So those are, for the most part, TradFi organizations. We raised a few $100 million to date. And then it's only a year and a half ago when we felt that the network was ready for prime time that we did a fair launch like Bitcoin. So we didn't do any pre-mine. Digital Asset is not even the largest token holder on the network, which I know is not very crypto of us to do. The founders, my exposure to the network is through my equity holding in Digital Asset. So,
but hold on, just go back with me. Just go back with me one step here. So, if you raised money for a token without a pre-mine, what are the investors getting? What is the? Because usually,
we didn't raise money. We didn't raise money for a token. We raised money to build technology, and then we launched the technology again, like Bitcoin. On the day we launched, there were 16 organizations that had to hit the launch button, and we all launched it together, and we all mined the first block together.
Okay.
So as an investor in Digital Asset, you invest in your belief that Digital Asset will be able to, first of all, make money on the Canton Network. You believe that Digital Asset's stake in the network will increase in value. That's why you'd invest. But
so it's almost the equivalent of it's obvious. It's almost the equivalent of Satoshi raising money for the first miners, so to speak.
Correct.
Okay, and can miners join the network? Can I join and start validating on the network, or do I need permissions? So anyone can.
Yeah.
Okay, so the entity that raised the money is Digital Asset Group, and they raised the money, and they're a validator on the network. Are they getting any other fees other than validating the network? Are they getting license fees, or I don't know?
Nope. So the technology is open source, and we can that's why I said, think about, we're the company that launched the network, and we're not the largest token holder. So it just shows you that we don't have any privileged position. We earn our stake in the network from being an active participant, just like everyone else. So we earn tokens from validating. We earn tokens from different applications that we've created that others use, and as a result of that, we earn tokens. So yeah, we're just like any other network participant.
What are some of those applications that you guys created and earn tokens, like things like wallets and things like gas and stuff like that?
Yeah, so we try to do some foundational building blocks of the network that others use, and then we do like a rev share on the tokenomics that they earn. So if you want to do like tokenization, you could use some of our smart contracts, and based on the tokenomics that you will earn, we get a portion of it. I think we didn't talk really about the tokenomics of Canton. So
yeah, so I want to get into it, but I think this approach is extremely novel. I just want to make sure that the viewers all understand this. So that means that if you created, for example, a token launch product, and I, as a user on the network, want to create my own token launch product, users can decide whether they should use mine or yours based on the fees. There's no commitment from, they don't have to use yours. You guys have just got maybe a head start because you created the language and because you've been here for the longest. You guys have maybe just got a bit of a head start, right?
Correct. I mean, I would tell you that a lot of the people we brought into the network are now competing with us on the services that we initially launched on the network, which is great. I mean, it's a really good outcome.
It's a really good outcome.
Again, I think for us, again, if you really want to bring institutional players at scale, you cannot do what have been done in crypto, in my opinion, for the most part, which is really the labs and the founder or founders really control most of the stake in the network. I think that if you really want to have, we have multiple publicly traded companies that are very risk averse that are now talking about Canton in their quarterly earnings because they have participated from day one and have tokens on their balance sheet. And I think when you
say participated, I saw the list of participants, which was like multiple blue chip real world companies. What did they do to participate? When you say the word participation, I want to just show the viewers this thing. So this is some of the names that are in there: HSBC, NASDAQ, Bank of America, Circle, Citibank, HSBC. How did they participate? What are they doing?
Sure. So let's just take like 3 months ago, we did the first on-chain treasury transaction. So not tokenized treasury, but actually holding the token, the US Treasury token on Canton is the equivalent of you holding it at the DTCC. And you needed the DTCC, first of all, to agree to bring on-chain US Treasuries. So that's one level of participation. For those of you who don't know, DTCC is the largest CSD in the world. They hold close to $80 trillion worth of assets, all US equities and other assets. And you needed two of their members, in this case was Bank of America and SocGen, to allow their clients to hold on Canton these assets. And we did repo, effectively like a lending product between US Treasuries and USDC. So you needed USDC to agree to issue USDC on Canton. You needed multiple trading firms that would want to do that to participate. And then you also had Tradeweb, which is a large blue chip US exchange, build a DeFi protocol to actually exchange US Treasuries against stablecoins.
I have to ask you a question here, because this is the part this is where my head gets like spinning. How did you do this? You were effectively, to get this done, you were operating in an administration that was anti-crypto, because this didn't happen in the last 3 months. This has been going on for a long time. So you were operating in an administration. You're in the US. You were operating in an administration and approaching US companies when the administration was hostile to crypto, and you managed to onboard these people. Like, who was doing it? How were you doing it?
Yeah, listen, I think that first of all, the really nice thing about this administration is a lot of times people think it's the new laws that are being passed, I actually think that it's more the posture of the administration that is really great, because a lot of the clients that we've been working with quietly are now very comfortable being much more vocal about what they're doing.
Yes.
I think that the reason we've been successful is we didn't go to these clients and say, hey, listen, just hold tokens, life will be great. Tokens will be moving freely in the ether and very cheap. And we like I said, we've built Canton from a very first principle approach of understanding how the law works in a lot of jurisdictions. So when you come and you explain to them that you understand what are the challenges, why, if crypto is not truly immutable, there are certain things that can really go bad. If you understand why privacy, and again, it's the ability to see information, but not for others to see it. When you kind of come at it from first principle that they understand, I think they are very open to having these conversations.
How many,
And again,
was it a biz dev team that went out and did this, or who did this? Who you were going to all of these people, and I mean, you were brokering a deal between Barclays and Circle and Bank of America and DTCC, and
yeah, I mean, me and a great team with me that again really understand these type of institution, and then a lot of help from our investors who are some of these players. Again, I think that the fact that we didn't do an ICO, we didn't do a pre-mine, the fact that we were patient, that we wanted to do things the right way, that we did a fair launch, that we did true open governance. We launched the foundation in the US during the previous administration. We have invited all of the largest firms in the world to participate and help write the rules of the foundation. I think that it's the culmination of all of those things together that really made these type of companies very comfortable using the chain natively.
Okay, so now I want to talk about the tokenomics, because there's been a lot of, I don't know if it's confusion around the tokenomics, but I mean, if you say to someone, what is the current FDV of Canton, you'll get about 85 different opinions, and none of them can give you a conclusive answer as to the tokenomics of how this project actually works. So
Sure.
you said that the project was not pre-mined, so similar to Bitcoin for those who don't know. So it's not where you pre-mint all the tokens and then hand them out, but the tokens are released on validation, I guess, or on some kind of work done.
Yeah, there's a mint curve like Bitcoin, like Ethereum, like Solana.
Okay, and the mint curve has the mint curve obviously rewarded early minters like Bitcoin did, and over time reduces.
Yep.
And okay, and I guess the mint curve is for validation of transactions, right?
It's not just for validation of transaction, it's also for applications that bring fees into the network. So I think that maybe if we take a step back, again, I think that one of the mistakes that a lot of the smart contract chains have made is that they just copied everything from Bitcoin. So if you think about Bitcoin, Bitcoin is a single use case. It's not a general purpose platform for many use cases. So it makes sense for those that secure that one single use case, the miners, to actually earn all the rewards for doing that. When you move into a general purpose platform, which to me is what a smart contract chain is, the value doesn't come from the infrastructure provider. It actually comes from those that bring customers to that infrastructure. Meaning, if, Diners is very different than MasterCard, not because the technology is secured better or not. It's because MasterCard has more customers and more people that do transactions on it. And therefore, for us, what we've noticed when you look at a lot of chains is a lot of chains will have like these DeFi protocols that become really, really successful. And then they ask themselves, well, if we bring all the activity, if we bring all the customers, if we
and then
bring
they spin
all
up a
the
side
fees
chain
to the network,
and they spin up their own.
why? Exactly. And honestly, that makes sense. I mean, they do all the hard work, right? They go to the conferences, they think about this new innovative product, they write the code, they need to come up with all of this innovation, and then they generate hundreds of millions of dollars of fees that go to someone else. So to us, the incentives are not aligned. It's imagine if every credit card network said to the card issuers or the card processors, yeah, you guys do all the work, but we'll take all the interchange to ourselves. Like nothing like that would ever fly in the real world. And I think that that's why you're seeing some of this bad behavior in crypto, that people effectively then just go and just spin up their own chain. So we wanted to create an aligned incentive for apps to remain.
So effectively, what you're doing here is you're saying, okay, for every block or validation of every block that's mined, a certain number of tokens are minted. And also for every X revenue generated by a dApp on the chain, X tokens are minted and given to the app that basically created this economic activity. So it's almost like the government paying tax to the productive residents as opposed to the productive residents paying tax to the government.
I mean, why do you bring government into this? It's just think about, like, again, no different than Visa.
Nature, not government. Nature rewards the apps.
No. But we have real world examples for this. It's like think about Visa and MasterCard, right? They collect all of these fees, right? When you do a transaction, but they don't keep those fees all to themselves. They take some to themselves, and they are the infrastructure provider, and they take some of that money to themselves for providing the infrastructure. But actually, most of the fees goes to all the intermediaries in the middle that bring the clients. It's the card issuers, it's the point of sale processors, it's Stripe, it's all of the people in the middle. So for us, over time, it's the users and the apps that, in our opinion, are worth most of the network or should receive most of the network rewards. It's kind of like, imagine if someone said today, Cisco should make the most amount of money from the internet. That would be nonsensical. Like, routers and all of those things. Yeah, it's the apps. Yeah, it's those that bring the traffic and the customers.
So that's how the tokens are minted, and then there's a burn as well. So on top of that, there is a burn.
Yeah. So effectively, so you have effectively a fixed mint curve, and in every block, there's some portion of the block that is reserved for the users, some portion of the block that is reserved for the applications, and some of the block that is reserved for the infrastructure providers. And that over time shifts the percentage. And like I said, it starts getting skewed heavily towards the apps and the users. But every block, you have effectively you have to burn tokens. And what our view was, again, with respect to the tokenomics, is that, again, another bad thing that happened in crypto is you could have crypto chains that really, like, nothing is happening on the chain, but they have like this really high market cap because people are just holding the bags. Our view is that the value of a smart contract chain should go up only because there's people using it, and therefore there's the mint burn equilibrium. So for every transaction, you have to burn Canton coins. And effectively, the view is, if the utility of the network is really high, where the burn exceeds the minting curve, then the value of the token should just
that would be what ETH was trying to do. The only thing with ETH is that the burn only happens when the network can't really handle the number of transactions. That's effectively what happened to ETH, right?
Correct.
Their thinking was correct, but their throughput couldn't accommodate efficiently enough transactions to actually really be burning. And so they they migrated all the transactions to layer 2s, and therefore it's not as deflationary as it should, as it could originally be. Yeah.
Right, and that's why the way you think about Ethereum is you just look at the price of Ethereum and you multiply it by the number of outstanding coins, and that's the market cap, that's the FDV. And similarly speaking, that's how we think about Canton. So right now, I think there's around 32 to 33 billion coins, and I think it trades I don't know where it trades right now, but let's say anywhere between 15 to 17 cents. So that's roughly a $5 billion.
So maybe let's talk about that. I want to talk about that. Let's talk about the project. Is the project launched? Because say launched, a lot of people are saying it's pre-launch. Hyperliquid has listed this as a pre-launch perp, but the token has been launched for a long period of time, right? So it's like, it's kind of like a weird scenario where people are talking about this as pre-launch, but the token's live. You can buy it and sell it on chain.
Yeah,
right?
it's live. You can. There's I think like 3 DEXs already where you can buy.
Okay, so
In one of the applications and then the rewards. Yeah, I mean it's been live for a while, but I think the reason for the recent pickup is that kind of again similar to Bitcoin. You launch a project, you need to have custodians, you need to have wallets, so it's taken the good part of the first 8 months just to bring all these complements to launch on the network. And it's really recently that you start seeing a lot of the activity pick up quite significantly.
So, I mean, is there going to be like, I don't know, call it a launch day where major exchanges listed, or is it just going to be like, okay, we've launched now and exchanges should just, I don't know, like list it whenever they want, or what's the process here?
Here, all I can say is that there has been, I think
A lot
a
of
CoinDesk article.
Yeah.
No, a CoinDesk. Well, listen. So first of all, I would say that for a pre-launch token or a pre-listing token, the perps volume has been surprisingly high. I think.
Okay. Yeah.
I think we were like top 25 somewhere from a volume. I think the first day had like $160 million of volume for something that has a 5 billion FDV. I think that's not bad. There's a DAT that was launched earlier this week, over $500 million for a pre-listing token. I think that's not bad. So I think that there's decent amount of interest.
How much money has the DAT raised to buy tokens?
I think the full size of the DAT between both cash and in-kind was $540 million.
Okay. And the in-kind obviously came from anybody that had pre-mined, or not pre-mined, had early mined tokens, which was, early
from anyone who had earned their tokens. Yes.
Correct. If anyone who'd earned their tokens.
Yeah.
It's just so weird.
Yeah.
I'm so much in the mindset of proof of stake,
I know
tokens.
we started this industry from Bitcoin and then ruined it all the way to things that are being sold without even having the technology ready.
Wait, let me ask you a question quickly, just so I understand something. In this kind of model, there's obviously no such thing as a foundation and stuff like that. In this kind of model,
there is a foundation.
And where does the foundation get its tokens from?
They were one of the first participants in the network.
Okay. And so the foundation is responsible for all the activities. So it's almost exactly like if Satoshi took the first wallet, and we're going to assume that first wallet was him, and he said, okay, this is now a foundation, and all the money from this wallet is going to be given to the future network growth of the token.
Perfect. That's exactly it. So we wanted to kind of replicate what Satoshi did, but actually we're able to think about, hey, wouldn't it have been nice if there was like an actual active foundation for Bitcoin that had, a nice treasury to actually conduct its activities.
You know what? I'm getting goosebumps. The reason why I'm getting goosebumps is because I remember how smart you guys were when we were sitting in the office, and I haven't had that smartness for like 2 years or 3 years since I left the office, and now I'm hearing it again, and it's like it's quite cool to like get back into that intellectual zone that like to hear how far ahead you guys are and how close you guys are, or how good your ideology is here. And I must say, I think we're running out of time, but I think given what we've heard here, it sounds like such a logical progression. And I think the amount of progress that you guys have made whilst effectively flying under the radar of most crypto investors. Like, when you talk about crypto investors, I think 2 months ago, if you would have asked crypto investors what Canton is, no one would have known. And all of a sudden, now everyone's starting to talk about it, or they're starting to realize it. But in the meantime, you guys have made so much progress under the hood that like the two are completely disjointed.
Yeah, listen, our view, and it's been a challenge because we've taken this approach on purpose, but our view is, especially given some of the sad stories or bad stories in crypto, long-term people would appreciate launching a project like this that has the right incentives behind it, and the right kind of like network behind it that have real things, rather than, you know, a cool crypto VC backed kind of project that has a lot of buzz behind it, but really no one have put really the long hard work to really do something that can sustain more of the long term.
So I want to just quickly ask you one last question before we go. When I look at the the real world assets on chain, it's $400 billion on chain. What is on this chain that is worth $400 billion?
Oh no, this is just one use case. Like I said, I mean, because of the privacy, the applications need to agree to share the information, to expose some of the metadata of what runs in them because of the privacy. So the first clients that agreed to do this is Broadridge, which they do repo, which is how banks finance each other, and 400 billion is roughly 10% of the repo market. So we're not even scratching the surface.
So you're
if we were to capture the whole thing, it would be roughly $5 trillion size.
So you're talking about a chain that already has over $1 trillion, a network of chains that already has over $1 trillion of assets under management, or TVL, if you want to call it that.
Yeah, much higher than that. And within the next year, I would say that will have many, many multiples. But I think that's the problem that a lot of times people in crypto don't understand, is there are north of $400 trillion worth of assets in the world.
Well, you've captured. Okay, so you've captured 1% of that already, and now the journey begins.
Exactly, just 1%. That's my point. We're not even close.
All right, listen, brother, it's been amazing having you here. Thank you so much for your time. If at any time we can help, and if at any time you need to send messages out to the world, obviously Banter would love to help you guys. And thank you so much for your time, guys. Let me know in the comments what you think about this project. Yuval, thanks, my friend.
Thank you.
Cool, guys. All right, so guys, that was amazing. I want to know in the comments what you think, and be honest. Let me know if you knew about Canton before this interview, or if you didn't know about it. Let me know exactly what you think. I will see you guys again on Sunday. Remember, on Sunday, 𝗕𝗏 and I are debating whether it's the end of the bull market or not. It's going to be a very, very, very heated debate. If you want to catch some parts of that debate, or some pre-debate debate, you go to my Twitter and listen to this.
Correction. Or we just have the major correction now.
That's on my Twitter, and it gets really heated.
If you said the bull market's over, which is
all right,
what
my friends,
saying
I'll
on
see
all
you
your
guys.
socials, right?
Hold on a second.
You've been saying the bull market's over.
All right, I'll see you guys again on Monday. Until then, on Sunday. Until then, trade well, my friends.